Good morning and welcome to the Killik and Co market update. It's now less than 2 weeks until the US presidential election, and last night we had the final debate between the two candidates. It was much more successful than the previous debate, partly helped by the use of mute buttons to prevent the two candidates from talking over one another. There was no really game-changing information to come out of the debate, but both candidates did reiterate their differing stances on the fossil fuels industry. For example, Trump is much more positive on the industry because of the revenue and the jobs that it brings to the US, and Biden is much more in favour of a gradual transition towards renewable power. Let's take a look at what the current gambling odds are telling us about the result of the election. As of last night, the odds were implying that Biden has a 64% chance of victory. However, it's certainly true that odds and polls have been wrong many times in the past. However, there are much slimmer margins between the two candidates in some very important swing states. 2 weeks today, we hope to have the result of the election, but one of the main concerns for the market is whether or not the candidates respect and abide by that result. This week, the copper price hit $7,000 for the first time since 2018. And copper is an essential component in electrification, so the price has been helped by investors buying into this trend for renewable power. Miners with high exposure to copper, for example Antofagasta, have been helped by this high copper price. Some investors refer to copper as Dr. Copper because of its historic correlation with the overall economic health. Copper is used in most stages of the economy. For example, it's in homes, it's in factories, it's in electronics, and historically a strong economy has coincided with a high copper price. So some might say that the recent rise in the copper price indicates an expected future economic recovery. This week, the UK Dividend Monitor was published, and this is a quarterly report published by Link Group, which analyses the payouts made from UK companies to their shareholders. We know that lots of dividends have been cut recently, and this report showed that UK dividends for the third quarter of this year were 49.1% lower than they were last year. Now, there have been various reasons for these dividend cuts. Some were imposed by the regulator. For example, UK banks have been told by the regulator that they're not allowed to pay dividends for the foreseeable future. Some companies have suffered such falls in profits that they're no longer able to afford their dividends, and some companies have been accused simply of taking advantage of the current situation and cutting their dividends simply because everyone else is doing so. Whatever the reasons, this has been a very difficult time for income investors, and we have seen some income investors starting to take a more growth-orientated approach and taking the cash that they need from capital rather than just relying solely on dividends. So do feel free to give us a call if you'd like to discuss this approach in more detail. Moving on to have a look at next week, it's looking very busy on the corporate calendar. It's reporting season and it's a big week for big tech. We've got results out from Microsoft, Amazon and Alphabet. That's it from us. Enjoy the weekend and we'll see you next Friday.